Hi folks, happy Friday and welcome to this week's last edition of Who Moved the Market. We promise to serve up an interesting show for you. Mangalam is here in the house. Mangalam, why don't you give them the headline?
The headline is that Zomato has turned net profitable this quarter. And the details will tell you that, that's not really the headline. The headline is how well they've done and how far they've come in the food delivery business.
Yeah, absolutely. And this is, by the way, this is not profit at some adjusted level, some X of this, X of that, or whatever, one business versus the other business. We're talking net profit at the absolute company level. It's a 2 crore rupee profit that they've delivered, right?
It's a 2 crore rupee profit. Now, let's run you through the numbers first. The most important thing is, we look at Zomato quarter on quarter largely because, not much changes from one quarter to other for businesses like this. Just the way you would have, IT companies report quarter on quarter as well as against year on year. And also the rate at which they are growing, it's more prudent to watch them quarter on quarter than year on year. So quarter on quarter, there's been a 17.5% growth in their revenues. Okay. But the big part is that the EBITDA loss, which was 226 crores in the fourth quarter, which is the previous quarter, is now down to around 48 crores itself. So yes, they've made losses on the EBITDA front, but there is an other income component, which is 181 crores, which the previous quarter was 171 crores. And they, because had a lot of accumulated losses, they're entitled to get tax credit. So they got tax credit of 17 crores, and they got tax credit of 16 crores in the comparable quarter. Despite all of this, they made a profit of 2 crores in this quarter, and they were loss making to the tune of 188 crores in the previous quarter. So net, yes, the profit was aided by other income. Yes, the profit was aided by tax credit, but more importantly, the profit was led to by reduction in EBITDA losses and improvement in their operational performance.
Yeah. So it's not just a one-off item that's bumping up the profit line, which is why we're celebrating. We're not actually. The street is celebrating the stock. It's been up about 10 to 12% all through the day, and this is after a very heady rally. Zomato went into these numbers on a high. Maybe the street anticipating that this path to profitability will actually continue for the company.
Well, it was not just that. Over the last couple of months or so, if you notice, all these new age companies had come back in fashion. Not just Zomato. You saw a big move in the likes of Delivery, Nykaa, all these stocks doing well. There are a couple of macro factors for that. First, the first couple of months, the street took some time to understand these businesses. So we saw immediately after listing, there was that sense of FOMO. Everyone rushed there, and there was a lot of free liquidity as well. So everyone was chasing growth at the cost of profitability. Then you had the funding winter, then a massive sell-off, and people started thinking, oh, these companies are not making profit yet, so what do we do? And there were interest rate increases as well, which hit their valuations directly, as a result of which there was a big decline, coupled with a lot of these initial anchor investors looking to sell, so there was a lot of supply side pressure as well. Now what has happened is these companies are chasing profitability at the cost of growth. A lot of the supply is out. Secondly, the funding winter has hurt them less, but it's hurt their competitors a lot more because these guys have raised funds in the IPO, so their balance sheets are strong. They can fend off competition. And the third thing is that interest rates are closer to the top than they are to the bottom.
Okay.
Right? So no further increases in interest rates means that the valuations are protected. With all these things, people are like, okay, maybe things are looking better for them. They are fending off competition. At some point, profits will come. And profits have come.
Well, it seems the universe is conspiring now to make things right for these companies, as Mangalam, numbered out a lot of these factors that are working. I do want to spend some time going over the individual businesses in a bit. But before that, help us figure out. We all learned this new metric called contribution profits, right, and contribution margins, which have been going up. Even this quarter, they've been going up for Zomato.
Yes.
Any other main headline internals that we should look at?
3 headline internals. So Zomato basically is, in a sense, 3 businesses. One is the food delivery business. The second business is Blinkit, which is quick commerce. The third one is Hyperpure.
What is Hyperpure?
Hyperpure is a B2B business where they supply stuff to restaurants. That is a smaller part of their business, but stable and has been what it is. A valuation driver for the company is the Blinkit business as well as the food delivery business. Food delivery is the core. Out there, the operations have been improving drastically. If you notice the contribution margin, which is the money that they make as a percentage of the overall gross orders value, it's increased from 1.1% in the third quarter of FY22 all the way up to 6.4%. And it's progressively been increasing quarter over quarter. So the food business is now mature. It has crossed that hump of making money, and thereafter all the more growth will lead to them making a little more money. Secondly, they've tweaked a lot of things as well. They've shut down 200 cities which weren't contributing a lot to their overall revenues, but was eating into their operational performance and expenditure and mind space. They did that.Ey've reworked a couple of things. And they've brought back Zomato Gold, which increases
We've all seen that
loyalty.
perhaps, right? Yeah.
30% of their revenue now comes in from Zomato Gold. So customers are loyal.
30% of the food revenue.
The gross order value of the food business comes in from Zomato Gold users. What does that imply? Zomato Gold users are loyal users. More of them buy food at a lot more higher frequency.
Yeah.
For Zomato, what matters is how frequently are you ordering, how much are you ordering, and how many more people are ordering more frequently. Eventually, that's all that matters.
And how much commission they're making from restaurants, which I believe also
About between 25
slightly,
to 30%. That's the take rate, but that doesn't have much room for moving either way. That's assume that as a constant.
Okay.
The other factors that work for them: more people ordering and more people ordering more, because the cost of delivery of a 1,000 rupee food item is the same as a 10 rupee food item.
True.
Because it's just the one person taking it from one place to the other.
Yeah.
But on 1,000 rupees, 25% is 250. On 10 rupees, 25% is 250 rupees. 2.5 rupees.
Yeah.
So obviously the loyal customers are the ones who are ordering larger ticket items. They are ordering more frequently, and that's eating the company's operational performance.
Okay, so that explains how some of these internals, like contribution margins, how they're getting better. Let's now just break it down a little further. We've already touched on food delivery to an extent. Tell us about the EBITDA performance, the margin performance of the food delivery business. Is that also getting better?
The food business is getting a lot better. I mean, Q4 FY22, the EBITDA loss was 189 crores. That narrowed to 113 crores.
Okay.
And the first time in the last quarter, second quarter of last fiscal, that second quarter FY23, they broke even on the food business. That was 2 crore profit. Then that manifolded to around 23 crores in the next quarter. So 2 crore turned to 23 crores. And guess what it is at right now? 181 crores. So
that's rapid increase
that
in
is
the
that's
EBITDA business, in the EBITDA of the food business.
that's the power of operating leverage and crossing that curve.
Okay, that's cool. So let's talk about this quick commerce, Blinkit, which I guess is the competitor to the Swiggy Instamart. That's
Yes.
what essentially that business is that we're talking
Zomato
about.
is a competitor to Swiggy, and
absolutely.
Blinkit is a competitor to Swiggy Instamart. The worry was, everyone was wondering whether Blinkit is going to be unit economics profitable. Blinkit is going to grow at the pace at which everyone is anticipating. And is quick commerce a concept that India is ready for?
Oh yes, we are.
Things
We know
coming
that.
in 10 minutes.
At least in Mumbai
Right.
and Delhi. At least I
in
think we're
Mumbai and
ready.
Delhi. So that's what happened, right? So a couple of things that stood out in Blinkit. The average order value increased by 11% quarter on quarter. So the same time last quarter, if you ordered something, your average order value would be 520 odd rupees. Right now it's 582 rupees. Again, like I said, it's the order value which is extremely important, because they get a percentage of that itself. The gross ordering value, which is the overall orders placed on the Blinkit platform, were up 4.5% quarter on quarter. So 2,140 crore rupees worth orders were placed on Blinkit in the quarter that went by.
Okay.
For all of this, the company's EBITDA loss, because they are investing in new stores, they are investing in the network, was 133 crores. So the business is growing, but at the same time, the losses are coming down as well. So as the business grows further, the losses come down, and this turns profitable as well. And as we've seen in the food business, once it's turning profitable and the proof of concept is established, the scale up is very swift and rapid. So, everyone's waiting for that. How big can Blinkit be? As per the press release of the company, the gross order values in mature cities for Blinkit are the same as Zomato food delivery. So if that becomes as big, then there are two engines of the same size which are firing full speed ahead.
Yeah, absolutely. And that could be, quite a game changer. So let's talk about what the management is also saying and what you picked up in the commentary. I think some of the brokerage notes are saying that maybe Blinkit can also become EBITDA positive, this year or a couple of quarters down the line?
Well, they've been targeting, Blinkit to be profitable soon by August 2023, or, at least contribution profitable. And thereafter net profit is something that we'll watch out for later. But if, the food business is something to go by, Blinkit is on its way to profitability and growth as well, because now what has happened is that the management has figured that they just need to focus on doing the same things over and over again and not get into any sort of adventurism. And that again is, one of the risks that everyone thought, that new age companies, they grow via acquisitions, they grow via entering newer territories, they grow via entering unrelated businesses. Zomato, for instance, had its own grocery delivery business which shut. Then it went ahead and renamed its quick commerce delivery to Blinkit. Blinkit has been doing well. They had a nutraceutical business which they shut. So there were a bunch of things that these companies were also trying to figure out. And now that they figured out their focus areas, it's best to stick to the lane and accelerate in that lane rather than veer away from.
And I think we can say hand on heart, it's the public markets which have been the greatest teacher in that, because otherwise you do go all over the place. I remember a lot of these, managements, not Zomato in particular, but a lot of them talking about how you need to focus only on GOV and top line and profits will happen. Their idea of looking at the business has now been, I think, shaped a little more differently. If you're coming to the public market space, you've got to take care of your public shareholders, and that's what at least.
And what it has done culturally is that every startup worth its salt right now is looking at profit.
Yes.
These guys were, what do you call them? Celebrity endorsers for all this, the startup universe. Everyone would look at Deepinder Goyal as their leader in the startup space, role model, so to say. Now, when they saw all of these guys focusing on profit, every other startup in the country is now focusing on profit more than growth, and they're focusing on unit economics. So it's kind of a great reset. So to that extent, you have to salute the public market.
No, absolutely. And that age-old saying that we love to quote again and again, because people like Mangalam and I have been following public markets for so long that what do they say? Top line is vanity, EBITDA is sanity, profit in the bank is reality, and that's what the market tells you.
Yes, and cash in your cash balance is reality.
Yeah,
and what I really liked in Zomato's numbers this time around is after many quarters, quarter on quarter, there has been an increase in their cash. Usually they would burn cash every quarter, so the cash was constantly coming down. The last quarter, the cash on their books was 11,323 crores.
It's not a small amount.
Not a small amount.
11,300 crores.
The stock had once gone to the market cap of 35,000 while having cash of 11,000. That is where a lot of people thought it would be a great margin of safety. But now it's increased by a couple of hundred crores, and the cash on their books is 11,573 crores. So that's a big positive, right? They're not burning more cash. They're adding to their already big cash pile. And if they can continue to do that, then they can grow.
And now the million or billion dollar question. How much of this is in the price? We're not asking Mangalam, but Mangalam's been poring over all of these notes and so much of commentary, right? I saw lots of price targets around, I think 115, 120 in that ballpark. The question is what from here? What next? I think that's what everyone's trying to figure out.
The what next here comes from what X here. The reason why I say that, and by X I don't mean Twitter, the erstwhile Twitter, I mean what multiple. Are you still valuing these companies at price to earnings? Are you still valuing them at EV to price to EBITDA? Are you still valuing it at price to sales? Are you still valuing it at price to the implied opportunity in the market? We don't know that yet. All the brokerages have a triple-digit target on the stock price. The stock price has seen a big rally.
Stock's already at 100. These targets are at 150. My question is, if there's so much optimism, you've got to 15 rupees. There's not much left on the table if you're going by those targets.
Yeah, and you're also looking at it not only as a price to earnings multiple. Now people are looking at it price PE to growth as well, PEG ratio. So if you are expected to grow 40% over the next couple of years, and these are not my words, these are the management's words, that at least 40% profitably, then are you going to give it a higher multiple because of this growth opportunity? If yes, then how much higher is your multiple than the growth? So if the stock is trading at 80 times and the growth is expected to be 40%, then you are trading at a PE to growth ratio or the PEG ratio of 2. So how much is what? So that's what they say, right? Valuations are science, and buying them, ascribing valuations is the art.
Absolutely. But you know what? Now the science and art debate gets really, really interesting, because now we do have profit on the table. So now you can take a call whether you should be valuing only at profit or, the opportunity, the market size, or the sales, or the EBITDA, whatever you might have, because now at least you have profit on the table. So fantastic. Big headline. I think it's a big moment for a lot of these new age companies that listed. I think Zomato was first off the block.
Zomato was first of the block. It caused that big new age company rally. Nykaa was already profitable when it came to the stock market. So from that standpoint, Zomato is among the earlier ones, but the first of the block, making its profits, the street will savor this moment for it.
The perfect conversation to have on a Friday as you think about what you want to order, or if you're dining out, where you want to go out.
I'm placing my order already.
I'm thinking about my dining out options. Okay, guys, we gotta go. Thank you so much for watching. Have a fabulous weekend. We'll see you with the markets again next week.